Welcome to Insights into Insurance with Tom Sorensen of Americana Insurance Group. All information provided is educational in nature and not intended to be acted upon without first consulting the appropriately licensed professional.
It's a Saturday morning, and that means it's time for Insights to Insurance here on 1450 KATE. And Tom Sorensen taking the day off. We welcome in Jolene Honkomp.
That's right. It's good to be here today.
It's a beautiful Saturday morning, and let's start off as we normally do. We did get a listener email, and it's Hello Insights to Insurance. A weekly listener. I have my own question. I'm just starting to plan for long-term care insurance as part of my retirement program. Can you tell me how much long-term care coverage I should buy? And do you have this product available? So, Jolene, we'll let you answer that question this time.
Sure. When Tom read this email, he thought it would be great to send me over to discuss long-term care insurance. As some of you may have heard before, I'm with JH Financial, and I have a partnership with Americana Insurance, and I have space in the office, and that is where my expertise is, in the financial side on the insurance, life, long-term care, disability, and business and land succession planning. So Gloria, to answer your questions, I'd like to go over a few things first.
And you've been in the industry for a long time, Jolene, over 23 years, and now working with Americana Insurance. Let's talk about those myths that are out there with long-term care and some of the stats that are kind of mind-boggling for some that maybe are not aware of it.
Yeah, they're really scary. 70% of all people over the age 65 are going to need some type of long-term care. Currently, there are 5.2 million people receiving that care. The average length that people need the care is 2.5 to 3 years, with 20% of those people needing care for 5 years or longer.
And some of the folks, male and female both, the lifespan, health span, it's really much longer today than it really has been in the past.
It is, and that's something that is really making a lot of changes in the market. The chance of people living to age 100 has increased 43% just over the last 10 years. So Medicare and Medicaid was not intended to pay for this length of lifespan. Normally it covered, Medicare, they were looking at maybe 5-10 years at the longest, and
Right.
Now it's getting up to 30 years.
And of course, the government programs, they always like to be meddling in some of those issues, and they're
Always.
tightening up. They're tightening things up.
They are, and this is going to continue, especially with the next statistic. 10,000 people every day retire in the United States, and that's going to continue until 2030.
Long-term care, probably the biggest financial risk facing Americans today. And Gloria's response or question, you're going in the right direction to think of long-term care as part of your retirement. It can wipe out your retirement funds if it's not built into a plan. And if you end up going into a nursing home, for example, a lot of those financials are gone.
They are, and they're all available to be taken. And the government will make sure, even if you're on Medicaid, they do try to find ways to recoup some of those money, even going after people's estates.
And most people think on nursing home care, when they think of LTC, it's not a pleasant thought, and really nobody wants to think about it right now, but you have to think about it, and you have to move towards the future.
You do, and in most cases, people do start out at home, and people like to stay at home as long as possible. A lot of people think that long-term care coverage is too expensive, or they look at that coverage as, if I don't use it, I lose it. And that's a perception everyone has, and my response to that is, if you own a home, you have homeowners insurance. So
you hope you never have to use the insurance, be it a
Right.
fire, a flood, a devastating, catastrophic loss. But you have insurance on your home. You need to have insurance on yourself.
Right, but most people, when they think of themselves, they don't get that coverage. And it's kind of mind-boggling, because both, if you make a claim on a home for a total loss, or if you have long-term care, that is a catastrophic event, and it's expensive. So it's something that should be covered and can be covered.
And they're skeptical of the insurance market, or maybe they think it's really too complicated. And Jolene, you can help them out with the complications if they think it is too complicated.
Right. And one of the other perceptions, a lot of people think it's going to be covered by health insurance or Medicare, or that family members are going to take care of them. And the reality of who pays for that coverage, you pay personally. Your medical coverage is just going to pay for your medical expenses, and custodial care is not a medical expense. And Medicare will pay for some of that coverage, but you have to meet the requirements. And those requirements are that you have to have a hospital stay for 3 full consecutive days, and it has to be for treatment, not observation. That's key. That happened in my father's case. If you meet those guidelines, Medicare will pay for the first 20 days of your custodial care, whether it's at home or in a nursing home, whatever you might need. The next 80 days, you have a copay. And that copay in 2017 was $165 per day. Once that 100-day period is over, it's on your own dime.
And it's something that people really need to look ahead, and not only those that maybe are at the age of looking at the long-term care insurance, but family members need to look out for their loved ones, and not only for their loved ones, but look out for their siblings, maybe their younger son or daughter. But now's the time to get with yourself and Americana Insurance and talk about these long-term insurance costs, because we all know one day it's going to happen, and it's going to cost you more in the long run than if you would
Exactly.
set up those appointments.
Right. Once you use your personal finances, when those run out, it goes retirement funds, selling off assets. And for those who are lucky, they have the long-term care policy. Lastly, it goes to Medicaid. And to qualify for Medicaid, you basically have to meet the federal poverty guidelines, and I'm not going to get into the details. There's a lot that go on to that, and like I mentioned before, those government programs, they're really tightening up, and that's going to continue.
Years ago, people thought that if you turned your home over to your siblings, that that was all covered, so if you did go into a nursing home, they couldn't touch the homes. Things have changed over the years, and there's a little fallacy maybe out there that you can set them straight on what actually will happen once you have to go into a nursing home if you don't have any insurance.
Right. And there is a look-back period on any assets that are transferred in the state of Minnesota, and that goes back 5 years now. And they are looking at even tightening that up and lengthening that to go back even longer. There are some states that do have longer look-back periods, and there are some states that have what are called FILIA laws, where they can also come after other family members to pay back that money, and they can certainly go after your estate to recapture that money.
Good point, Jolene. Good point on that look back. We can just touch a little bit about that look back policy. Is that looking back at their financials so that maybe they realize that they're going to end up going into a nursing home next year, or all of a sudden they find out, man, I have to go into a nursing home, I'm going to get rid of a bunch of my money and I'm going to give it to family members. Is that kind of the look-back process?
That's exactly what it was for. Any of your assets or gifting that is done over a 5-year period, they will look at that, because that's the loophole they were trying to close, that people, if they're anticipating health issues and they want to spread out those assets and give them to family members, they will look back 5 years and recapture anything that you had given away, and that's free game for them to repay and to use for long-term care expenses.
We're talking with Jolene on Insights to Insurance here on a Saturday morning. We're going to take a quick break. We've got more to talk about, including planning for your long-term care, the cost, and then some of the options that are out there. But let's take this quick break, Jolene, and when we come back, we've got more to talk about on long-term care insurance with Americana Insurance, and Jolene Honkomp is going to be back with us here in just a minute.
When it comes to crop insurance, there is one thing Americana Insurance won't do. We won't come out to your place and shovel manure for you. But we will offer annual information seminars to keep you informed and annual insurance reviews to make sure you're covered. We'll provide crop insurance quotes that are easy to understand and hail, fire for crop, replant, and green snap insurance. But again, we won't shovel manure. On the other hand, you probably already met too many people who will. Americana Insurance. We're the A-Team. AmericanaInsurance.com.
And welcome back on this Saturday morning as we're visiting with Jolene Honkomp with Americana Insurance and, of course, talking about long-term care on Insights to Insurance. Jolene, just a quick story. I know years ago when my grandparents were living, they worked hard for their money. They did not want to give up anything that they owned to my mother, and that has changed over the time. And now we need to start planning for long-term care and go over some of the costs maybe.
Yes, in Albert Lea, when you look at the average monthly costs, and this is just looking in this area and surrounding area, private nursing home room is almost $10,000 a month at $98, $91. If you go to a semi-private room, it's about $9,000 a month. Home health care is about $5,500 a month, and assisted living about $3,000 a month. You can get a home health care aide for anywhere between $14 and $20 an hour. So as you can see, the costs are very high, and like me, I'm sure most people can't afford to pay for that coverage very long out of pocket.
And we're putting the puzzle together. There's lots of pieces to the long-term health insurance, and we put the pieces together. You have some product choices that are available in the market today, and that's where we want to tell people that now's the time to start worrying about it, not when it's too late.
Right. They do medically underwrite their products a lot differently than they did in the past. And that's because there are so many people that need this coverage and they are paying for it longer. But they have gotten more creative in the market. So you have what I call the traditional coverage, and that's your individual long-term care. I touched on that in the beginning. A lot of people think of that as if I don't use it,
right,
I lose it. But they do have a lot of riders that you can add to that product. So you pick your monthly benefit, you pick how long you want that coverage, and they have different options if you choose to stay at home where you can access that a little bit differently. Normally those are reimbursement policies, so you would have to put in a receipt, you'd get that money back.
Okay.
But you can't even add a premium refund rider on that. But the other products that are very interesting are long-term care riders, so they can be added to life insurance. It's a permanent product like a universal life insurance policy. It takes care of the if I don't use it, lose it feature, because you're going to collect it one way or another.
Okay.
You're going to collect long-term care, you're going to collect a death benefit, or a combination of both. So that's a nice thing there. They also have that available on annuities. If you put money aside and it has to be a lump sum, you can get an additional portion back for long-term care.
You may be listening in this morning going, wow, Jolene's got a lot of information and it seems very confusing. And it can be confusing, but what you need to do is give Americana Insurance a call and just ask for Jolene and set up an appointment to go over these options so that it's not so cumbersome for yourself, or even bring in your, maybe you have an executor of the estate that you've already pre-assigned. Set up a meeting and go over all of these long-term care insurance areas, and you've also you've got a hybrid product as well.
Yeah, that one is very interesting. That is one of the newest product for long-term care, and it's what's called a linked benefit. So you're picking your long-term care benefit up front, just like you would an individual policy.
Okay.
And then it backs into life insurance. So you're getting your biggest bang for your dollar on the long-term care side, because that's what you're really looking for is long-term care. But you are going to get back all of your premiums, and depending on your age, even more, if you were to die without using it. So again, it takes care of that. If I don't use it, I lose it, but you're getting much more on the long-term care side. So you have a lot of options available to you, a lot of different companies, and a lot of nice features.
And that's where we want to make sure that when we're putting the puzzle pieces together for the puzzle for your family, for yourself, that we get the puzzle pieces put in the right direction, because as we've said all along, it costs you more in the long run than it would, or in the short term, I should say, than it would in the long term if you have your long-term insurance set up. You know, and one of the things that people maybe get nervous about is the products do require medical underwriting, and they say, oh boy, I don't want somebody looking into my medical history, but that's how it's done, but it's an easy process.
It is. A lot of these products are done just with a telephone interview. And they're not sending an examiner out to do an exam. They'll just look at physician records if they need to, but they look at a pharmaceutical database. A lot of the information they need is online. So the main thing is a telephone interview. And when I work with someone, I like to go through and pre-qualify them medically first, so I can see which company and which product would work best for them to meet their needs. And then I like to talk to them about their budget, to see what they have set aside that they can use of their personal funds to pay for some of their coverage without hurting a spouse or someone else that is in the household, and then finding the long-term care portion that would supplement that. I like to think of it as something is better than nothing, but I want to put them in a product that they're going to keep and is going to be comfortable for them.
And making it beneficial and cost effective is what it all
Correct.
boils down to, putting those puzzle pieces together. That was a fast 15 minutes, Jolene.
It was. There's a lot of information to cover, so I would really love, if you're interested in the product or want to know more, please give me a call.
JH Financial or Americana Insurance, the number at Americana Insurance?
At Americana Insurance is 377-2000, and I am there 2 days a week.
Schedule an appointment with Jolene. Let's get some long-term care insurance locked in for yourself and make it less affordable now than it is going to be in the long run.
Correct.
That'll do it for this Saturday edition. We'll be back next Saturday with Insights to Insurance with Americana Insurance here on Kate.
You've been listening to Insights into Insurance from Americana Insurance Group. All information provided is intended to be educational in nature. Before acting upon any information obtained during the Insights into Insurance radio show broadcast, consult an appropriately licensed professional.